Welcome to the Excess Guarded Fund of Funds Q1 2019 performance commentary. Just to remind everybody of some of the underlying managers we use within this fund of funds. On the domestic equity side, we make use of ABAX, Fruit, Marzi, as well as ABAX for small cap equities and Tequanta for some passive exposure. In terms of property, we make use of both Bridge and Prudential, and on the flexible income side, ABAX and Tequanta. In terms of our offshore fund managers, we have a great mix of fantastic offshore fund managers, currently made up of Veritas Asset Management based in London, Coronation, FPA based in Los Angeles, and Resolution Capital based in Sydney, Australia. In terms of the underlying asset allocation within the portfolio, the fund currently has 25% exposure to domestic equities, 5% exposure to domestic property, 48% exposure to domestic fixed interest, 14% exposure to foreign equities, 4% to foreign listed property, and 4% to foreign fixed income. So in total, the fund has 23% invested directly offshore, a further 10% invested in Rand hedge stocks, and 67% of the portfolio has pure domestic equity exposure, as well as domestic bond and cash. In terms of the top 10 holdings within the portfolio, they would be Naspers at 1.8%, Sasol at 1.2%, and British American Tobacco at 1.1%. From a performance perspective, the funds had a strong start to the year, with the Excess Guarded Fund up 4.9% for the first quarter of 2019, based on strong equity and offshore equity market performance. The peer group average over the same quarter was 4%. Over a 1-year period, the fund has delivered a great return of 8.3% versus the peer group's 6.7%. If we look at what were the main contributors over this quarter, first of all, it was the domestic equity carve-out that did well based on a strong exposure to Rand hedge stocks. The decision to maintain duration in the domestic bond market also paid off. South African bonds gained as firstly global bond yields decreased, and second of all, the South African Reserve Bank kept interest rates unchanged, and lastly, Moody's maintained the country's current credit rating. The offshore exposure within the portfolio also helped, with first of all strong performance coming from the emerging market regions, as well as just strong asset class returns in general from offshore markets, with the World Equity Index up over 13% in US dollar terms. In terms of underlying changes or trades within the portfolio over the last quarter, these were kept to a minimal, and we basically just used the daily inflows and outflows of the fund to tweak our asset allocation where required. So overall, a strong start to the year, and we certainly hope things continue this way into 2019.